This Ict A+ setups makes losing impossible. I thought the idea of a holy grail strategy was a scam till I back tested this strategy for 100 times, and the result is insane, guys. If you're serious about your trading this year, this is something you cannot afford to miss. Here are things you will learn in this video. I'm Victor Snow from Trading from the Soul, where smart money is simplified. If this helps, like and subscribe. So the Ict A+ setup criteria is what? We want price action to come and read a sell side liquidity. So this is what I mean by SSL. When it comes to what read this sell side liquidity. Sell side liquidity is a zone the retail traders are looking to enter as what? A breakout trader. Once price action comes to take out this level, you see that what retail traders would want to jump in as what breakout traders from this level. Their stop loss will be above this level. That's why here is what a sell side liquidity, guys. So once here is rated, we want a market structure shift, which is when price action comes to what to take out this range. Price action will first of all take out these retail traders before what coming to take out this range, guys, and we name here what a MSS. So price action will now leave us with this new trading range of what PD array is. So what I mean by the PD array is what PD stands for what premium and discount, and the array is what list of things. What this means is what it is just the arrangement of this institutional reference point hierarchically. See what I mean here is this is most of the PD arrays we have here, which number one is the premium and discount, which number two is the Ict ultimate trade entry, number three is what the Ict order block, number four is the Ict fair value gap, and number five is what the Ict breaker block. So the Ict premium and discount is what we want to sell from a premium level, and Ict talked about buying from a discounted level. So after this market structure shift, we want price action to come back to this level. Number two, the optimal trade entry, which is what adjusts your 0.618 to what your 0.786 levels of your Fibonacci tools. To get to your Fibonacci tool, you check this upper left hand corner of your screen, and when you click on the settings of it, this is how I set mine. So this should leave you to this optimal trade entry, and here gonna be your entry, your stop loss below this low here, and here gonna be your take profits. So the order block, which is what is simply the last close down candle before what these up close candles. So mark out this candle as my order block. Just have to make my entry here, stop loss below here, and I take my profits here, guys. So the fair value gap is what when there is a gap between the first candle's high of the week. This is what I mean. This is your first candle of choosing the high of the week of the first candle, you mark it out, and the third candles, remember 1, 2, 3, third candle low of the week. Can you see there is a gap between these two? That gap is what we call the fair value gap, guys. If we should have had this particular candle come to enter inside here, it will invalidate this fair value gap, guys. So I have to just mark from this first candle high of the week to what this third candle low of the week. That is my fair value gap, which I will make my entry here and my stop loss below this level. So number 5 is what the breaker block, the last up close candle before what price action took out this sell side liquidity before making this market structure shift. So mark out this candle as what my breaker block. So we simply want price action to retrace back here, my entry and my take profit levels can look like this. So let's take an example. So we have the 1 hour time frame of GBP/USD. You can see a break of market structure, guys, my low and my high, another break of market structure, my low and what my high. First thing we say is we want this sell side liquidity to be rated. This is our read. So next is we want the market structure shift, which is when price action comes towards take out this high. and can you see we broke this high, giving us a market structure shift. So it leaves us with this new trading range here. So you have to point these guys out right here. So first we can see here is what our order block, the last close down candle before this, guys. See what our fair value gaps, first candles high of the week and third candles low of the week, the breaker block, the last up closed candle before we move down, and what the optimal trade entry here now, which is 0.618. Also we can see our 50% discount here as well. So the question here, guys, is which one are we going to trade, guys, given that we have all of these guys to trade from? Because if we try to trade all of them single-handedly, the loss of this will be fatal to our accounts. Imagine losing 5 trades in a row. If we think we can cherry pick the ones that we like probably this 1 and 2, we could have something like this. Price action come what to take out this level that we've chosen we want to enter from, and we'll also continue moving to the upside. I will not feel this level for us. That is why trading is not about guessing, it is knowing exactly the thing to do. So to know your Ict A+ setup, it must be closest to what an inducement zone in the market. So how can you now find your inducement zone in the market? Is what an inducement is the first pullback after what a market structure shift. This is our market structure shift. We have this pullback that made a break of market structure. This it will be what my inducement zone in the market. So an inducement is simply a way the institutions trick naive traders into entering a trade in wrong timing. Can you see the two are in what the same direction but the wrong timing here? Price action will come back to take out these naive traders and then tap my entry, which will boost our chance of winning and take us to the upside. Means that what the institutions were here in the market. The pros don't chase trades, they wait for the perfect setup. So heading on, once I have my inducement zone, I have my other institutional reference points, my order block, my fair value gap. So how do we now pick the A+ setup, which is what the one closest to the inducement zone? So which one is closest to this inducement zone? Let me pick this order block here. That is why I can make my entry, my stop loss below here, and my take profit can be this high in the market, guys. So I want price action to return back to this here and I'll enter. So in this our example, to know the A+ setup, it must have an inducement. So in this my setup, currently we don't have any inducements yet, so we anticipate for one. Okay, can you see we made a break of market structure here? The first value pullback after this market structure shift. Here gonna be my inducement zone here. Which institutional reference point is closest to the inducement zone? It is definitely this other block. That is why I gonna make my entry, stop loss below this level, and I'll take profits this high that have not been rated. So let's see how the trade unfolds. Okay guys, we are in the setup, guys. With price action came and tapped here, getting off. Can you see how price action moved rapidly to our take profit level, guys? And that is a win for us. Can you guys now see how many losses we would have taken from this level? In trading, it's not whether you're right or wrong that is the problem, but how much you make when you're right and how much you lose when you're wrong. If this video is helpful, like, show your support, give me a like and subscribe. So let's take another example, guys. This is the 1 hour time frame of USD-JPY. Can you see what price action came and swept this sell side liquidity? What raided it? Told you it could be what a week or a candle raid before what moving to the upside to make what a market structure shift. So this is my new trading range. Next, I'll mark out my institutional reference point that I taught you about, which I have my fair value gap right here. Again, I have my breaker block right here. Could we have caught this trade? The answer is no, because of what? This breaker block right here didn't have any inducement zone before price action came to tap it. So this is what I mean. After we broke here, price action came and tapped here before what? Breaking market structure. means here was my inducement zone right here. So when price action came back here, we couldn't have entered because it have already tapped this breaker block right here. So when I could have entered this breaker block is when I had something like this. Now can you see this inducement zone didn't tap this breaker block right here before what's breaking market structure to the upside. Please don't skip any part of these rules. Amateur traders always focus on making money. The next setup are there, but professional traders focus on what's protecting the money they have. So always add to this. So I'm gonna remove this breaker block, mark out my inducement zone as this. So the zone that is closest to this inducement zone is my fair value gap right here. So let's see another example, guys. Again, can you see we had what this sell side liquidity taking before what this market structure shifts, and here gonna be my breaker block, and here gonna be my other block. Can you see we didn't have any inducement zone? So once you did not see inducement zone, we cannot enter any of this setup right here. And can you see how price action came back and cleared this whole guys here, even took out this low? The market don't always want to take money from you, just want to teach you where you are wrong. Mistake I see traders make is what? So they're waiting to enter from this level. We see markets what retrace back and made a break of market structure, guys. It means that we have what another inducement zone right here, guys. So mistake I see traders make is try to what buy from this level. This buy is wrong, guys. So one price action to what come back to this our level in the market. Let's take another example. This is Euro-USD, guys, the 15-minute time frame, guys. So we can see a break of market structure right here, our low and our high, guys. And can you see price action came and cleared this low? So we have what a sweep of this sell side liquidity. We point out this high to be rated. Okay, can you see we rated this high? We wait for our inducement zone, guys. Can you see we made this pullback that broke this level, and here can be our inducement zone. This is point out the institutional reference points. So our A plus setup can be this other block which is closest to this inducement zone. So I can make my entry here, stop loss below here, and target this high that have not been rated. And let's see how the trade unfolds. Okay, can you see how price action moves to our desired take profit level, guys? If you've not been using this, I want you to correct this in your trading. Do you know that the famous Thomas Edison, before inventing the light bulb, he tried over what 8,000 times, and when being asked about it, he said that he haven't failed. He said that he just found 10,000 ways that didn't work. Sounds a lot like trading, doesn't it? Opportunities in the market multiplies as you seize them. Mark Douglas will say that the goal in trading is not to be consistently right, but to be consistently profitable. If this helps, show me support and give me a like and subscribe. And if you've been struggling with trading, I just launched a free 3-day trading course on what it takes to be a successful trader. Link will be at this video's description. If you want to learn about the other ICT concepts, click on this video on your screen.